right, with further ado, maybe let's get started. Let's see that we have it's kicking up now. We're close to 50 participants, so really cool to see that. So everybody, welcome. Good morning, good afternoon, good evening. Welcome to the mobile payment and customer financing panel discussion. And as you all know, mobile payment and customer financing is part of the fintech industry. I think it's an alive and kicking ecosystem throughout the world, and maybe it's even more alive in emerging markets, where I think the fintech industry in certain cases is actually a catalyst for economic growth, and also it touches upon topics such as financial inclusion. So what we're going to talk about today are the key trends and challenges that we face regarding mobile payments and customer financing, and especially related to the digital marketplaces. Of course, we got a great introduction from Romain from Jumia. And as I said before, in order to address all these various topics, we have a great panel together consisting of venture capitalists. We have actual startups or tech companies who are here in the session. And we also have, from the Philippines, we have somebody giving their view of their business. So let me give you first a quick introduction of the speakers, and then let's jump straight in. So on the investor side, we have Diego Serebrisky dialing in from Mexico. He's the co-founder of Dalus Capital, which is a venture capitalist firm that backs, and I think this is really cool to hear, purposeful founders building enduring market-leading companies. Really looking forward to hear from you. We have as well Brand-Engel, co-founder and managing partner of Quona Capital, also a venture capitalist firm focused on fintech for inclusion. Also really looking forward to hear from you, Monica. Then on the tech side, we should have soon Ifeoluwa Orioke, better known as IO. He's the Chief Commercial Officer of Flutterwave, actually one of Africa's first unicorns, and they're focused on connecting Africa to the global economy by providing fintech solutions, B2B and B2C. I'm very happy to say that we've actually started a collaboration with one of our business units in Uganda, being Hima Cement. We also have Chris Holloman. He's the founder and CEO of Divido, a white label platform that connects lenders, retailers, and channel partners at the point of sale. And I think, Chris, I need to congratulate you with your recent $30 million Series B. I think that shows that you're absolutely on the right way. And we have as well Pradeep Gode. He's the managing director for India for C2FO, connecting accounts payable and accounts receivable, providing cash flow optimization opportunity. And you are poised, or maybe you already are, the next unicorn. And I think, Pradeep, you are already working with our companies in India, ACC and Abuja. And then from the Lafarge Holcim business, we have Maganti. He is the marketing and innovation director of Holcim Philippines. And in Holcim Philippines, we're working with close to 600 partners, serving customers such as large infrastructure projects, ranging all the way to community hardware stores. So a very big range of different customers. It's really cool to see your take on fintech, the fintech industry. Regarding myself, Arnoud Volker, I work for the digital team at Lafarge Holcim. I've been very fortunate to dabble into many digital opportunities in Africa and Asia. From that point of view, also really looking forward to this session. To the panelists, I know this has been a very short introduction of your end. I probably do unjust of the various facets that you have in your work. And for the audience, if you want to find out more, please go to the GroundMAQER website where you can find further details. Another message to the audience, if you have any questions, use the Q&A functionality on the right. I'm sure you are buzzing with questions already. Don't hold back, put them in there, and we'll do as best as we can to serve all the questions you have. All right, let's get started. Diego, let's go to you first. As I said before, you're an expert in the Latin American market. And amongst others, you've made successful investments in the mobile markets, in the mobile payment startups. What are some of the key differentiators of the fintech companies that you have invested in?
Hello, everyone, and thanks for the invitation for being here. Well, I think what we have seen is in Latin America there has been an amazing development in the tech entrepreneurial ecosystem, especially in fintech, in recent years. This started probably around 7-8 years ago, but the last couple of years have been crazy how the ecosystem is growing. And what we see in terms of the entrepreneurs and the teams that are building these solutions is, the first one is there are great teams with a lot of talent. We are right now getting to the point where we're getting some serial entrepreneurs in some cases, but in general, a lot of the talent is people that have, from the region, that have worked before in the US in startups on the tech sector, and they, at some point in time, they decided to bring that experience to Latin America because they saw the huge opportunity. And I think maybe a lot of the penetration of financial services in emerging markets, especially in Latin America, is very low compared to most standards that you will see in more developed countries. So that generates a huge opportunity from people that are unbanked and lack of payment alternatives. And these great teams with great talent, have this vision to capture this blue ocean, and using a technology that is scalable, that they are set to do that. I think a big differentiation of the teams that are more successful is that they're obsessive on focusing on the customer needs, as opposed to, I think, the traditional financial sector that many times they focus on what they want to do, and they hope and they expect that the customers are going to like it. The fintech, this very successful fintech teams, they really think they focus on what the customer pain, and based on that they develop the solutions, and that's the reason that they start to get such an adoption from clients and users. I think the other thing is that they are not afraid of fighting or against the incumbents. When you see in many cases, at least in Latin America, the financial sector has a very concentrated ownership of some businesses, and these incumbents saying, I'm not afraid of that, I'm gonna build the team, the product, and I'm gonna fight, right on against some of these guys. And they are being very successful at doing that.
Thanks I think for that.
Okay.
I think that's good to hear. So it's all about, it seems that grit and determination is a big factor in what you're looking for. I think, Monica, from your end, you have quite a bit of experience with investing as well, obviously, and you focus more on the fintech space, right? And why for you is financial inclusion important for the emerging markets?
Yeah, so thanks for having me. We're, as you correctly introduced, Quona focuses specifically on fintech for inclusion, only in emerging markets, primarily because we think it's a blue ocean opportunity to have both what we call performance and purpose. So on the performance side and the sort of the market opportunity, we describe financial services as the oil that greases economic engines at a household level and a macro level. There are a lot of correlations between the level of bank penetration, bankerization. When I say bank, I mean any kind of formal financial services, not necessarily a traditional bank, and GDP growth, wage growth rate, even income equality. So there's a lot of positive benefits we see macroeconomic growth and income generating benefits when there is high financial inclusion. On the impact side, it also allows people who are marginalized to be part of mainstream. So a lot of the work, a lot of the investments we're doing are things called embedded finance, where the core business like e-commerce, transportation, logistics, again, fundamental services that these economies are longing for are enabled by financial services. So for us, it's a very powerful lever, both on the financial return side as well as on the impact side.
That's great. Happy to hear that. Maybe we jump to experience from one of the tech companies that are playing in this field. Pradeep, with C2FO, you supply additional liquidity in cash, both to B2B buyers and also to sellers. What are the main opportunities that you see, in particular for SMEs, to use such supply chain solutions?
Thanks, Arnoud. Thanks for the opportunity to participate. I was reading the Wall Street Journal this morning about swelling deposits in the US banking system. I believe this number has gone up from 13 trillion at the beginning of 2020 to over 17 trillion at this time. And it seems like the banks in the US have gone one step further to ask the corporates to spend the cash on their business or move their deposits elsewhere, right? So against this backdrop, you will also notice that the financing needs are quite acute in the SME segments across the globe, right? And this is the type of dichotomy many leading corporations, such as yourselves, have taken note of, and they have come to realize that they need to actively step in and support their supply chains and ecosystem partners. And this is exactly the void that C2FO is helping customers like Lafarge. So we've seen that in B2B supply chains, these are very complex. These are trust-based networks that are formed over many, many years, sometimes decades. And these large corporations are taking note of this, the strength of the network that they own, the trade data that exists in their ERP systems that are representative of the strength of this network. And they're building technology tools, either by themselves or using platforms such as ourselves, to leverage this data and create win-win relationships, win-win partnerships, and win-win propositions for their entire B2B supply chain, right? Both on the customer side and on the supplier side. And this can surface as many interesting opportunities like retailer financing. Our friends here at Divido are looking into that, or tier 1, tier 2 supplier financing, which is something that C2FO is passionate about. So what we are seeing as a demographic trend is that large companies are starting to leverage external fintech solutions to combine those solutions with data that is proprietary to them. Maybe in some cases partner with financial institutions and create custom solutions that would have a win-win effect on their entire ecosystem, right? And this is, I think, a phenomenal B2B opportunity right there. One other trend that I am seeing, especially in India and many countries like Brazil and Mexico, is just the democratization of data, right? A lot of these countries have set up public tax systems which have rich trade data, and that will also create for interesting B2B financing use cases. And I'm sure a lot of the audience are seeing this as a trend, and many of us are getting up to benefit from these sorts of developments as well.
All right. Thank you very much for that, Pradeep. And you were talking about some of the emerging markets like India. Maybe let's quickly talk to Chris in the meantime. Chris, you are operating on a global scale with Divido. What do you see as the main challenges and opportunities to the future of buy now, pay later?
Well, I think buy now, pay later is something that's a truly universal kind of preference when it comes to consumers. If you have a choice between emptying your savings now or maxing out your credit line today versus applying for a line of credit that allows you to spread the cost, especially when it's interest-free, it's a no-brainer, right? Even if you were a millionaire, that would be an attractive proposition. So regardless of how much money you have, when given the opportunity to spread the cost, especially if it's a bigger purchase and more considerate purchase, whether it's a furniture or a piece of equipment like a computer or something like that. I see that continuing, that the universal appeal for buy now, pay later means that more people will use it if they're given the choice. I think that's the kind of the biggest trends that we're seeing. It's becoming a new hygiene factor in the same way that maybe 50 years ago, credit cards was sort of a novelty. And obviously today we think nothing of it is so mass market. And that's exactly where I see point of sale finance going, retail finance.
All right, great. That sounds very exciting indeed, Chris. Ram, I think you've been listening to all these things, and I can see from your face you're excited as well. From a more corporate perspective, how do you see that fintech technology and startups can change the way you operate in the B2B space in the Philippines?
I know. Thanks for having me. Holcim Philippines is one of the leading building materials companies in the Philippines, and a good portion of our business is coming from small job site construction, such as individual homes. And the main actors in this sector are hardware stores, small transporters, small contractors. You could call them very small businesses. They have a revenue of less than $2 million a year, and $50,000 to $2 million. And these guys, most of them are around 40, that's the median age. And what we have seen in the past couple of years is a stagnation, particularly after the pandemic. But many of these players have exited the market or changed their profession, which is a bit sad because construction is the bedrock in which many emerging markets are built on. Philippines sees construction as one of the key sectors, but yet there is an exit of many of these people. I think fintech has a big role to play in terms of improving the flow of capital and enablement of the small businesses, which will accelerate the economic activity. And like Monica was saying, it's a huge opportunity for banks or for the financial institutions or startups because there's so much capital there. So that's how I see it. It's a big opportunity to do financial inclusion of this very small businesses.
All right, great. I think there is we've already uncovered the first overlap between what the fintech industry has to offer versus what you're actually looking for. So I'm looking forward to see if we can further that collaboration with you in the Philippines, Ram. Diego, let's go back to you regarding market trends in Latin America. Of course, Latin America has been under the influence of the COVID-19 pandemic as well. How has that been changing the trends, and how did any of the fintech startups or fintech tech companies adapt to this change?
Well, yeah, in Latin America, we have been impacted by COVID, more or less starting in March last year, and most countries implemented different measures in social distancing, going in some cases to total lockdowns. That had an important change in how consumers and businesses use the technology, and we have seen an acceleration in the adoption of technology in general. And fintech has followed that. So in general, most fintechs have seen a significant increase in the demand for their products with the lockdowns and social distancing, probably except for lending. That's the one that, more or less, slowed down because the consumers and the businesses were concerned about, what the future will bring. Now that is reactivating since probably the beginning of this year. But, I think that the interesting thing is that this social distancing and lockdown has created a change in consumer and business behavior that even when we go to a normality that, most countries in Latin America are not there yet, we think that a big part of that change in consumer behavior will stay. So this has really accelerated the adoption of digital technology. and is here for a stay, and will continue, as I said, in the future.
Okay. Yeah, I think we're seeing that in many other areas outside of Latin America as well. And I think, Monica, you have a specific view on this, right? Where, for example, on the B2B commerce side, we see companies like Sokowatch in Eastern Africa, Ula in Asia, Capital as well in Northern Africa popping up. How do you see the development of this in Latin America?
Oh, I think similarly. In fact, there was a study done by Bain Capital that very much to Diego's point, we're not going back. So the interesting thing and the maybe unexpected thing that happened during COVID was behaviors and trends that we saw that were present pre-COVID got accelerated. And I think two things got accelerated. One is the idea of technology-enabled businesses are very fit for purpose in a world where we are forced to transact remotely and be socially distanced. So there was a necessity that really drove people to habits and products and ways of financing and interacting and transacting that maybe were more on for early adopter stage. So really accelerated adoption in a way that then people enjoy the benefit of the convenience of the lower cost. So there's a reinforcing factor where that flywheel continues. So I think there's, that I don't think we're going back. And while again, we at Quona talk about tech and touch. So I always think you need to have a physical component, whether it's a distribution point of sale or an agent helping, just the way when we started, airlines started forcing us to use check-in ourselves. There was an agent there helping you sort of check in. I think there'll always be a little bit of touch. But the idea is having that touch come in at very important points where it's really value add, and things that are less value add, we automate. So I think that's very much a trend that we're continuing for. I think the other thing we see is this, what we call flight to quality, where the expectations are different, meaning so your expectations of what wait time should be, what cost should be, really change. And again, I think that's a positive thing for the consumer. I think it's a positive thing for a small business. So our portfolio has just experienced really phenomenal growth in the last year after an initial lockdown. But I do think it's something that we don't see changing. I think, again, we're at just the beginning, not at the end. I guess I'll just say in Latin America, we actually haven't done the B2B e-commerce models he mentioned. So Sokowatch in Kenya, Ula in Indonesia, Capital in Egypt. We haven't yet done something there are ones like this Chipper in Colombia. There are actually models like that are really interesting. And interestingly, in countries like Mexico, there are kind of retailers that use like Arca Continental. I mean, there's, sort of there are actually networks that actually look at this sort of broad capillary distribution. Probably the closest we have is in Brazil, a company called Facili, which is interestingly following a model in China. So what's fascinating about this tech development is that some of the innovation is happening in other emerging markets and doing a south-to-south transfer versus a north-to-south. So the model that Facili is modeled after is a company called Pinduoduo in China, which is a $300 billion market cap. And basically it combines e-commerce with social media to basically bring the power of digital to the very mass market. These are the lowest income segments. These are people in secondary cities who actually get very low margin goods like vegetables and meats, as well as FMCGs, fast moving consumer goods, delivered to their community. So it's just remarkable. So not only are you lowering costs and improving supply chains, you're doing it in a way that's more convenient, like the product comes to them versus them going into the city, driving many kilometers or walking to get there. So it's just super exciting what technology has been able to really deliver in terms of radically improving quality and access.
Okay, that's great to hear, actually, and also to hear the transfer of ideas and technology from, I should say, the south to south transfer. And you were talking about the changing customer expectations. I think on the other side, Pradeep, you're also, I think, facing the fact that some of the smaller enterprises you are dealing with are actually less experienced with technology, and maybe they're skeptical about what the benefits of the financial solutions that you bring to the table can actually bring to them. How are you addressing those issues?
Thanks, Arnoud. And the answer actually lies in something that Diego and Monica had highlighted earlier. So I'm going to refer back to some of their comments. But in our experience, both big businesses and small businesses, decisions relating to financing matters are proven to be sensitive decisions, and there are certain processes that exist, protocols that exist as to how they decide on these financial matters. And so it's natural for skepticism to creep in, both with large businesses and small businesses, especially when the proposition is packaged in a manner that it looks too good to be true, right? So while there is skepticism on one end, the SME businesses are also keenly evaluating, I would say, the benefits in the light of friction, benefits in the light of seamlessness, ease of usage, etc., etc. So our strategy to solve this challenge is really twofold, right? Firstly, we deeply care about touchpoint and customer service, and really a relationship-based approach to addressing and getting our customers comfortable with using the platform. And this challenge, however, is to scale these sorts of customer-centric approaches for millions of businesses. Right? And that's where we've been able to build technology and use data to make that interaction really timely and relevant. Right? We obsess over customer service metrics like Net Promoter Score, which allows us to measure how successfully we are doing our job. Secondly, we've been able to use technology to deliver the proposition in a manner that's easy to use. So in C2FO, we use a phrase called 2 clicks to cash. And that's really how easy it is for businesses to come into the platform and access liquidity. Right? So, going back to what Monica and Diego were telling me, it is the customer sensitivity, having that touch point and making it timely and using technology to solve the problem. But on a positive note, our learnings over the last 5 years in India and maybe 10 years globally is that customers in India, enterprises in India, and maybe more broadly in emerging markets are more open to change. And our data, our internal data suggests that that's probably a factor of 2 to 4x, depending on what country. When you compare a country like India, I would say that there's 3x more likelihood of customers being open to innovative financing solutions versus their counterparts in more developed regions. So it's not necessarily a bad news to have that skepticism, but we are able to deal with that and get them over the finish line.
All right, great. That's good to hear. That's really the perception of tech is changing, and has been changing already over the past year. I think that's good to hear, and it holds great promise for the future, of course. I see the first questions coming in to the audience. If you have questions, use the Q&A functionality on the right side of your screen and pop in all the questions that you have. Maybe talking a little bit more about changing customer expectations. I think one of the elements as well is an expectation of a more personalized experience. Chris, I think with you on the B2B side, clients expecting maybe even B2C type of level, service levels. What are your key aspects you keep in mind when you're building the perfect user experience on your platform?
Well, I think, it sounds a bit obvious to say it, but it's to kind of understand the user, who is this person, what's their job, what are they trying to achieve, how are they solving it today, what is it within that experience they like or don't like, and how can we iterate around that and improve around that. So I think that's sort of where everything starts with us, solving real client needs, and also to remember to validate that, because it's too tempting that you have one client meeting with one person and they say something, and all of a sudden this is now you're going to be your focus, you're going to fix for this problem, when actually we should be affording ourselves the luxury, perhaps, but I would argue the necessity to validate that with others, so that we don't chase a golden goose that turns out not to be real. So I think that's the key thing. Just listening to your clients and validating that with other clients before you spend time, money, and effort to try to address that or iterate further. All
right, great. So actually what you're saying is the basics of making sure that you know what your customer wants, and validating that still holds true in whatever you're doing. Great to hear that. Ram, maybe a question to you, where of course in Lafarge Holcim, We work with a large set of startups already through the LH Startup Maker. What is your interest in the fintech solutions for Holcim Philippines? And how has the attitude of Holcim changed over the past years towards actually working with startups?
So for us, going direct to very small businesses like hardware stores, retailers, small contractors is a key strategy for Holcim Philippines. As I mentioned earlier, fintech has a key role to play for providing access to credit, organizing bookkeeping, in short, enabling these businesses. So we are very interested in working with startups, especially fintech startups in the areas of digital ordering, credit scoring, lending, e-proof of delivery, etc., etc. So our attitude to startups has changed considerably over the past few years, especially when we realized the strength of the venture client model of LH MAQER. We think the startups are not only able to bring solutions faster to the market than a large corporate could, but they also have the resources and the technology to execute the solution. So we are the largest building materials group in the Philippines. Our scale is very exciting for any startup with the right product to enter this exciting sector. I think the construction sector in Philippines is poised to grow tremendously. And I guess the startups can get benefited by partnering with Holcim.
All right, great. So I would say that's a call to action. If you are a tech company, you think you can add something to the business of Holcim Philippines, by all means, reach out, either through the organizers or to Rem directly. I think we're going to have great interactions. Let's have a look at the questions which are coming in. Maybe it's a question from Ulas. It's a question to Pradeep. What are the different ways in which banks can play a role in supply chain finance through fintech platforms?
Thanks, it's a good question. Banks have obviously been in the supply chain finance business for many decades in various shapes and forms, both on the customer side of the equation and on the supplier side of the equation. What fintechs like ourselves have been able to do is to take that control away from the bank and give it back to the large corporate that owns the trade relationships. And in that process, these large corporations have been able to, one, bring more liquidity to their suppliers, potentially use their own liquidity, and create a fungible mechanism to take that liquidity to any part of the supply chain. There may be times of the year where the large corporation may not have the liquidity that they need to support the suppliers. They could potentially go to a bank at that time. So you are putting a technology infrastructure in place where your data, your supplier's data, and the bank's information is all falling into place so that you can make these payments depending on where the liquidity lies, right? So that's the sophistication. It's a friend and a foe relationship that fintechs have. I mean, it's no different from consumer lending or any other financial technology. We are disrupting banking world on the one end, but we are also creating alternate avenues for banks to still do the same business and maintain those relationships with large and small businesses.
All right, great. Thank you very much for that, Pradeep. Let's go to the next question. What value is attached to the customer master data maintenance as regards to mobile payment and financing? Anybody wants to pick that up?
I'll go. I mean, it was amazing. Right before this, I was on the board meeting of one of our B2B e-commerce, and we were noting that most of FMCGs spend in the millions of dollars to companies like Nielsen for data, for intelligence on their companies. And the intelligence Nielsen is getting on a macro level, I mean, it doesn't even touch the activity. We call it the informal economy. There's a whole gray economy that is invisible, but very productive and very much a driver of employment and core economic activity. And FMCGs, it's a complete black box. They have a very sort of fragmented supply chain where they go through middlemen to basically get to the end retailer. So the idea of actually capturing that data doesn't only bring efficiency. So the beauty of B2B e-commerce is an immediate efficiency in terms of that small mom and pop retailer who needs to order goods, whether it's from a fast-moving consumer goods or another supplier. But the other benefit is the data that gets collected. And Amazon and other companies showed this. Once you can have that data, it can actually analyze at an SKU level margins, time, days on hand, pretty fast moving versus slow moving. I mean, all of these things you don't know, it just sits in a warehouse, and you don't know what's sitting in a warehouse, what's turning. And so the ability to really give that data to the suppliers who then can make smarter pricing decisions versus, again, giving millions of dollars to Nielsen and then just putting radio ads up and hoping someone shows up. I mean, it's incredibly inefficient. So the way money is spent now is incredibly inefficient. All that money gets wasted. The middlemen wake off, but no one is really getting value. It's a real economic failure. So we're really excited about the efficiencies that can come out of these models. And that's the ancillary business. It's not even the core logistics and financial services. It's a data and intelligence business.
All right, great, thank you. I see a question specifically to Chris. I need to quickly scroll down. We have lots of questions coming in, which is great. Chris, in your opinion, what is the most important characteristics a buy now, pay later program needs to have?
Well, I think the most fundamental thing is to protect the consumers, to make sure that consumers don't get themselves into debt that they should not be taking out, that they cannot afford to keep up, given their other outgoings, especially in times of economic uncertainty that we live in today. So we don't want to create new problems. So that must be the number one thing, that we do the right by the consumer. And once we as lenders or participants in this ecosystem can satisfy that condition, that's when we can think about everything else. And I think having a quick, seamless experience is probably the second most important thing. You don't want to be uploading documents, taking pictures, and going through 10 different steps. I think seamlessness is probably the second most important thing.
Okay, good. Great to hear. Maybe let's talk a little bit about the, I think, a topic which has been in the news recently quite a bit, cryptocurrencies. What is Lafarge's and the panel's view on the use of cryptocurrency to enable payment in their supply chains, especially in emerging markets?
Well, I can go on that one. I'm personally I'm a little bit skeptical that cryptocurrencies is a good payment method because of the volatility that these currencies have. So they are not a good storage of value, I think. The rails can be very effective, especially for cross-border transactions in some cases. But there is a great experiment starting now. I don't know if you're aware, but El Salvador, which is a relatively small country in Central America, this week approved to have Bitcoin as legal tender vis-a-vis their, the dollar that they use as a currency. So we will see in the next months how that works, and if people that have access and could use Bitcoin for payment, how that evolves in a relatively, a small control setting.
Yeah, I just wanted to add something there, that more than cryptocurrency, I think the blockchain as a technology has got a big role to play, especially things like smart contracts should be a great way to enable payments and supply chains. I can see a huge potential there because there is a lot of inefficiency, legal cases, disputes between suppliers. I think things like blockchain technology can help smoothening the supply chains. Huh?
Yeah, I think the last word is not said on the cryptocurrency. I think, Diego, you started off with being skeptical. Ram, you see great opportunity, and I think both of you are right. We need to see for further developments and see how well this is going to be used in the specifically in the emerging markets. Let's go back to the questions which are out there. A question from Bruno, I think from Guinea. Has anyone developed a simple but robust customer risk assessment and financing tool for unstructured markets, where there's little data on retail customers and access to bank credit is a real issue? I'm sure we have quite a few people that want to jump on this.
Well, I can tell you that in Latam there are probably, I don't know, if probably close to 100 different startups trying to do this with different approaches, and they goes from using the data generating with the transactions already to people using behaviors on the mobile devices as predictors of credit worthiness. So we will see a lot of this in the future, and normally what we're seeing is, and I think the way this will evolve is we will have these credit bureaus using these tools that will provide that credit assessment to whatever fintech or other companies want to use. That's the natural step, I think.
Yeah. Anybody wants to follow up on that?
Yeah, I think there are companies that. Sorry.
No, please go ahead.
No, I just said that there are quite a few companies in many parts of the world. Some names come to mind like First Access in Africa. I think they were one of the pioneers to use mobile phone data to come to credit risk scoring. So, and I think in Southeast Asia we have many companies in the same space.
Monica, I think you wanted to add something as well.
I was going to make the same point, Ram. I mean, he mentioned one, and India we have Credit Mantri. In Latin America we have lending companies like Confio. In Mexico or Biz Capital in Brazil, and the model, like Diego correctly said, the model is very similar. They're using this new digital footprint that we have because people have mobile phones. Technology like GPS and geolocation are a real thing. Other fascinating technologies like governments, again in Mexico, that have pushed e-invoicing, which actually require now by law companies, merchants, to actually produce a digital receipt. And what's interesting is that the government has created a public repository that you can tap into through API to actually use that data. So now companies have a digital record of cash in, cash out. In old microfinance days, we literally would put someone at the door of the shop and would say, okay, it's Tuesday, that's a slow day, how many people came in? Okay, I'll go on Saturday, which is a fast day, and I'll count how many people get in, and I'll make an average and make a guess at what their working capital is. Now there's no guessing. There's a digital receipt of exactly what is bought and sold. And the beauty is that that's how you avoid over-indebtedness. You're lending against exactly what the business needs and what it does. So you're not giving them too much. You're not lending against a piece of equipment or what they can put a personal guarantee on. You're lending against cash flows. And that's beautiful because it really helps provide a product that's fit for purpose and moves to productive uses. So I think it's really exciting, and there are lots of models. I do think the devil's in the details, and I do think there's good models and bad. So I just think because it exists, there's a lot of diligence, and that's what I think good investors do, is figure out which ones are really designing thoughtful products and have a good go-to-market strategy and are very client-centric. But I do think there's a lot out there that is super exciting to us.
All right, great. I think a question along the same lines, specifically for Chris. Chris, what is your vision for end-to-end loan origination services in emerging markets, where assessing customer credit worthiness on real time could be more challenging versus other mature markets?
Yeah, I mean, what's happening here in Europe is around open banking, right? And even though it's been talked about for several years, it's not really come to any sort of degree of mass adoption. But I think it will, because it's so superior to other ways of kind of exchanging data between banks. And hopefully the emerging markets can learn from that and kind of hit the ground running and seeing kind of the end result of that. So hopefully open banking would be the end vision for speeding up how lenders and credit providers can assess a customer's credit profile. But, as others mentioned, there are other ways today, whether it's through your phone or whatever. In our case in particular, so Divido white labels buy now, pay later platforms to banks. And the one way that they do their buy now, pay later journey seamless is that they offer initially the credit to existing customers, which means they've already gone through the inconvenient way of establishing the creditworthiness of a consumer. And all the customer now needs to do is to authenticate themselves as a genuine customer of that bank, and they can look at their bank balance and history and so on. So that's obviously a great way to lend money quickly to an existing customer, but clearly it means that the retailer then in turn needs to work with multiple banks. So and that's where we add value to the retailer. They connect through our interface, and they can link as many banks as they wish. So that's the other way I see it, existing clients getting more credit through their existing bank.
All right, great. Thank you very much for that insight, Chris. Let's move to a slightly different topic, digital marketing. And the question is, can digital marketing be applicable in a high demand and low supply scenario where we don't aim to expand, but to tap on high margin customers? Is that something that people have an opinion on, the panelists?
And again, we're a big fan of what we call performance marketing or digital marketing. And what it allows, again, is a lot of precision on understanding. It's called micro marketing or micro segmented marketing, where you can have with great precision good information about what different customers need. And so I think how you use that data, I think it depends on the business model, but I think it shows great promise. And it allows us to what we call risk-based price more effectively, where you really are trying to price and make things affordable versus one generic price to cover both high and low risk customers.
Okay, great. Thank you very much for that, Monica. Ram, I think we've been talking about this as well already a few times, right? About the digital marketing and what we can do with that. What is your how do you feel about digital marketing? Is that something that Holcim Philippines is already ready for?
No, absolutely. And for me, for our kind of category, digital marketing is obviously a lot related to content. A lot of our customers, our ecosystem are not very well informed. So we have this content platform called Pinoy Builders, where we try and engage with a lot of our stakeholders. And through that engagement, obviously, we generate quality leads, which then get converted into business. So I think digital marketing for me is the future. Obviously, it's not exactly same as pushing your product messages and trying to just do advertising. It's much more about providing content, meaningful content to the end users, and then develop a strong relationship.
All right, great. Thank you very much for that, Ram. Io, I'm going to try it one last time. I'm not sure if your connection works, but if you can, let's give it one last try. And maybe what will be really interesting to go back to one of the first questions we asked you, is some of the success factors that you are experiencing when it comes to customer financing and mobile payments. You can give it a try. Maybe in the chat you were suggesting earlier. Let's see if I can see anything for you. All right. Okay, Io, I see that technology is not fully 100% with us today. I do apologize for that. I think it's a learning point which we're going to figure out in the next GroundMAQER summit that we're going to have. For the time being, I would like to thank all the panelists for your input, for your great insights. At least from my side, I truly enjoyed this. I've learned a lot, so thanks a lot for that. And I would like to invite everybody to go back to the main session, where we're going to have, I think, a few closing remarks from Philip Leuteker, the Chief Digital Officer of Lafarge Holcim. So panelists, once again, thank you very much for sharing your insights. Audience, thank you very much for your questions. And so we'll see you at the main event. I think you need to go click on sessions on the left-hand side and then go to the, I think it's called main stage. So see you all there.
Thanks, everyone.
Thank you.